Wow. Bitcoin just made an all-time high above $105,000. But if you're watching this, you may be thinking, oh gosh, did I miss the boat? Is it too late? What if I told you the story isn't over and there's still a way to get in smartly without chasing the hype? Bitcoin has been turning skeptics into believers and small investors into, well, let's face it, Bitcoin millionaires. But here's the catch: jumping in now isn't as simple as it seems. The risks are bigger than ever. And many people are asking, what should I do now? Patterns like the Bitcoin recent explosion of over 100% since August makes people really anxious where they want to get in now, but now may not be the right place. My job is to help you cut through the crap, or excuse me, noise, and give you a closer look at clear, actionable insights. Because, people who hype Bitcoin like Michael Saylor, I want you to buy, hold, buy it anywhere. It doesn't make any difference because over the next 20 plus years. But what happens if you're not a 20 plus year investor right now? Are there other ways to in this cat? Let's take a look. In just a bit, I'm going to take you through a technical analysis of Bitcoin's current chart. And since Bitcoin trades 24/7, this chart is always alive. I'll show you where the risks lie and reveal the best potential buy points. But first, we need to talk about what makes buying Bitcoin right now so tricky. First, Bitcoin is very volatile. Just in August of this year, it was 100+% below its current prices. And also, one day it's $105,000 for this Bitcoin. The next day it's 95 or 80 or even as low as $50,000. Are you ready to go through those kind of pullbacks, even if you are a long-term investor? Two, government regulations. We're still not sure exactly what the government's going to be doing with Bitcoin. Governments are cracking down on Bitcoin or crypto worldwide. I think that with the new administration coming in, it's going to give us an opportunity for Bitcoin and other cryptos to grow more and maybe get more adoption into mainstream society. And maybe people even start spending it more on tangible things. Big players, often called whales, can move the market with just a few trades. And let's not forget a competition for other cryptos like Ethereum and Solana can also affect the price of Bitcoins. Then there's things like the environmental concerns. I recently did a video that was about the nano-nuclear powered reactors that are starting to crop up amongst the big companies. Even crypto mining companies are starting to shift their focus towards a more sustainable, reliable source of energy. So how do you invest in Bitcoin in a smart way? Here's a roadmap that'll help you navigate this tricky market. First, start small. Only invest what you can afford to lose. Bitcoin is exciting, but it's also unpredictable. Learn how to utilize the other tools required to get into Bitcoin. Well, I don't get anything from it. I do have an account with Coinbase that allows me to trade Bitcoin and other crypto in a straightforward way. Diversify. Don't go all into just one of the cryptos. Maybe spread it around to two or three Bitcoins. Maybe you set up where every month you deposit maybe $100 in Bitcoin or $100 in just moving it over to your crypto account like Coinbase. Do what I call smart dollar cost averaging. Now, some people who promote dollar cost averaging say, well, just buy it wherever it's at. I believe that one can take a look at the charts, understand pullbacks, and hold their money that they're depositing every month or every week or at a regular basis. And then when prices pull back on Bitcoin, invest then. If you need some help on understanding that, I have a great recording. It's called the PEP routine, which stands for Precision Entry Point Routine, which will coach you up on how exactly to be patient and be prepared for the moves in crypto. So instead of buying all at once, invest small amounts over time. And this will help you avoid the pressure of timing the market perfectly, which I don't try to do. I just wait for the patterns, wait for pullback resets. Bitcoin is shown a pattern of pullbacks after reaching all times high, like it did just today at just slightly over 105,000, of pulling back between 30 to 50% or more. So, as I said, be patient, be prepared. Should you look to buy for the long term, swing trade, or do both? Have a strategic plan. I think that some people have their plan is, well, I'm going to buy it now, no matter what it costs, and I'm going to hold it forever. Okay, yeah, that's a plan. I'm not sure it's the wisest plan because if they just hold it forever, how are you going to have another plan? Here's a really great idea: is you buy it, and let's say it runs up 100%. Just pull out of it, sell enough of the Bitcoin to cover your initial price cost. And therefore, the rest of the Bitcoin that you own is basically the cost base of that is zero. And then and wait and do it again, get it in. And that way you build up a large portion of Bitcoin. And that's a really smart way to do it. Hey guys, knowledge is power. And follow the news. Follow the news about Bitcoin fundamentals. They've got some great videos over on the YouTube channel about one technical analysis. Of course, I suggest going over to Market Tech Talk, my YouTube channel, so you can learn a little bit about technical analysis. But learn the mechanics of how Bitcoin trades, how crypto trades, and then keep your eye on the trends. Who knows? We don't know if it's going to continue to fly up above 105,000 or not. If you find this video helpful, subscribe to the channel and hit the bell to be notified when we do post new updates. And better yet, please share the video on social media and tell your fellow traders. As I promised, we would talk and get into the technical analysis of Bitcoin right now. And we're going to go there right this moment in time. Here we go. Here's our chart of Bitcoin. And I've got the weekly chart because I think it's more predictive and paints a really good story. Recently today, the Bitcoin ran up and hit a brand new high at $105,100. But I want to take a real quick look and see what kind of candlesticks are we really putting in right this moment in time. So let's dial this in a little bit, and then we'll come back and look at some of the past actions of what happens when momentum gets extended to the top, to the upside, like it currently is, and what happened the last time this happened. So as you can see, on last week's candle, we should be going over to Monday. I think we just did that. Yeah, we are now painting the first initial paints of the 16th of December, which is Monday. The market for Monday is open. But as I look at the candle from last week, what am I seeing? I am seeing what's called a hanging man, which is a bearish reversal signal. Now, if prices go above that, that will void that. So I know I have, at least right now, strong resistance at the 105, 100. So with the way that Bitcoin moves, I would be looking for prices to move on up a little bit. If we break above this level, and you could actually just say, if it breaks above, let's say 105, 500, that could say, hey, we're still going up. Now, that's not a negative, that's a positive. However, by looking at these, what's going on with the momentum, it's telling us that we're getting at the boundaries of the upper momentum level. So while prices could continue going up, there's a tendency that it will slow down and potentially reverse. Now, the reversal has not taken place yet in what I trade is the TSI, which is a true strength index, which is similar to the RSI, but I think does a much better predictive job of both tops and bottoms in the way I've designed to trade it. This is a specialized one that I've did research on, and I've set the numbers up on it. If you're looking to trade that particular one, it's the exponential, and I use the settings of 883, and it does an uncanny job of facilitating not necessarily when to get in, but when potential triggers can happen. And so Bitcoin is hovering near its all-time resistance level, all-time high. Where might it go from here? Great story. Well, one thing to take a look at, let's assume that this 105 is the high. I can go back and just throw in a Fibonacci to give us some idea of where we might fall to. I will go down to this low that happened back in August. It's a real simple fib up to the top to give us something to talk about. That normally, that if in fact we get a reversal off this, where are prices likely to go? There's a high probability of prices going. And then that's part of the thing that you have to make up your mind about. Am I willing to ride this out for it to fall? Normally, we're going to fall back into what I call the magic fib box. The magic fib box is the 38% retracement down to the 1618 retracement. And it goes along this little box right there, approximately. So it could fall back down into that area and then bounce. How much of a drop would that be if it fell into that area? I'll grab my rule and I'll just measure from the high here and see what kind of a pullback it would be just to get down into the magic fib box, which is the logical target. So right there, to get to the top of the fib box, it's about a 20% drop from the highs. Remember that, from the highs. The middle section of that turns out to be about a 26% drop, and the very bottom of it is 33%. So in the area of technical analysis, if this does in fact turn out to be a reversal signal here on the hanging man, that's the logical place for prices to pull over. What else needs to happen? One of the other things I want to be aware of is I want to look to my left. Where in the past has the ESI and the other momentum indicator I use your market forecast basically shifted to the downside and started to fall? That happened back here first in March of this year. How far did it fall before it bottomed there? Grab the top of that, take it to the bottom, which is there. It dropped 23%. What about when it did the double top here? Oh, it fell from here at 25%. And what about this last time here? And I'm just going from the swing high down to the swing low. And on this last one, from the swing high up here, the swing low, it fell another 29%. And over what time frame did this happen? As each one of these took about 4 to 8 weeks for that to transpire. So that's where I come across saying, okay, be patient, be prepared, because it's as appearing as if Bitcoin is ready to roll over with its momentum. And we've seen what happens the last few times that it has done that. What about this last period here? I want to measure from this low here, which was back in September 23, up to this high, and throw in one more fib just to get an idea of what might happen. So from this low here up to this high, well, that was a heck of a run. That was 196%. From this recent low in August, we ran up. Pretty nice move, up 114%. Great moves. So after those kind of moves, though, they expect things to turn around and fall. Let's throw one Fibonacci on from this high here back to this low and take a look. And isn't it interesting that there's a 50% retracement? That's the exact target that it hit on August. We had this candlestick, which is a dragonfly doji / hammer reversal signal, and then started rolling back up. So as I said, it appears as if the path of least resistance is down. Now, what I would need to do is if we continue to break out, let's say I break above the 105, 100, then I have to do a recalculation of my analysis from a Fibonacci standpoint. It doesn't void my analysis that we're reaching or getting close to a topping formation, but it may happen from a slightly higher level. And that's okay. As they say, technical analysis is both an art and a science. Let's take a look at the longer term indications here. I'm going to roll this out and get an idea also. One of the things that's very interesting is you'll see this was back in November of 2021. How much did Bitcoin fall during that period of time? So you can apply regular technical analysis to your analysis of Bitcoin. They work just as well. It's a daggum chart. And guess what? If it's a chart of prices, action, it's going to basically give you what you're looking for. Anyway, that dropped about 75% before it went on its next run up. How much did it rally from this low here in November 2022? Well, the rally here was always good to know. And that rally back up was about 352%, which is pretty significant. That was the rally that it took over that period of time. How many days with it? It was 70 bars or approximately 70 weeks worth of data. The next two things to take a look at real quick is basically you've seen this pullback up here, but what were these smaller pullbacks? And I want to on paying attention to when you get the crossovers in the TSI crossover, which getting close to having one. And so there we had one there, we had one there, and the importance of waiting for those crossovers. And I'll just go here to this one, and the pullback right here was it pullback all the way to about 21%, and then another pullback that was about 20%. So we're getting these 20% pullbacks. And then what did you wait for to buy? And we'll cover that right now. Simply this is I'm waiting for my TSI then to cross up to the upside like it did and like it's doing right here. When that crosses back up, that gives me the green light to start trading again. And from there, I would have got into a position when we crossed and broke back above the 8-week moving average. That move there is about 166%. And even if I only took it to where it crossed back down, 150%. Yes, you can trade Bitcoin going forward and trade the technicals on it. So if you think it's too late to invest in Bitcoin, maybe. But the good news is the market isn't going anywhere. And with the right approach, you can still position yourself for growth. And like I said earlier, be patient and be prepared. If you really want to take your trading skills to the next level, check out the video that'll show up right there where I get into some more of the aspects of technical analysis and what I do to beat the market every year. Aloha. God bless everybody.